The UACN Property Development Company PLC, as part of its activities in raising 15.961 billion naira ordinary shares of 50 kobo each at 1 naira per share through the capital market, visited the Nigerian Stock Exchange to engage securities dealing members and other stakeholders on the facts behind its rights issue. It all started with the ceremonial closing gong, which was performed by CEO Mr. Folashokpe Ayesimoju, flanked by members of the board. At the facts behind the UPDC issue proper, the divisional head shared services of the Nigerian Stock Exchange, Mr. Bola Adeeko, representing the CEO, gave the opening remarks.
We are particularly pleased that UPDC PLC has chosen to use this platform to further inform the market of this ongoing offer and other strategic and operational development in the company. As the market is driven by timely, relevant, and accurate information, your interaction with the market through this forum is very welcome, and we encourage you to continue with this trend. Over the years, UPDC has grown to become one of Nigeria's leading indigenous real estate companies, engaging in the acquisition, development, sales, and management of high-grade residential and commercial properties. The company has built a long-standing track record within the Nigerian real estate sector, having completed multiple landmark residential and commercial developments, successfully sold high-quality properties across the country, and developed in-depth experience in delivering excellent facilities management services. To address imminent maturing debt obligations and reduce the high debt servicing cost, UPDC PLC is seeking fresh equity via rights issue to significantly deleverage the company's balance sheet. In their filing to the exchange, the company indicated that the proceeds from this issue would be used to pay down its short-term debt obligations, thereby reducing financing costs. At the Nigerian Stock Exchange, we provide a platform to support listed companies to meet their strategic business objectives. We have continued to position ourselves as the African exchange of choice for issuers and investors by implementing far-reaching transformational policies aimed at strengthening the corporate governance of our listed companies. We wish UPDC PLC great success as it embarks on its capital raising exercise through this rights issue of 15.9 billion naira, using the platform of a globally recognized exchange.
Mr. Folashokpe Ayesimoju gave a presentation to the market on the activities of the UPDC, the rights issue, and strategies beyond 2020.
Over the course of UPDC's just over two-decade history, the capital market and the Nigerian Stock Exchange have played an instrumental role in funding the company's growth. UPDC has listed a bond, has embarked on rights issues, and created a listed real estate investment trust, none of which would have been possible without the active support of the investing public and the capital markets. UPDC today is 64% owned by UAC and 36% owned by several institutional and retail shareholders. And the company has evolved into a business with three distinct arms. There's the development side of the business, where property is created and either sold or leased. There's the services side of the business, where we generate recurring income from facilities management, asset management, development management. And finally, we own a hospitality business, which is a 471-room hotel in Festac. UPDC today has 28 billion naira of assets, or 29 billion naira of assets. The largest single asset is attributed to our hotel. The next biggest asset segment is our share of the listed real estate investment trust, the UPDC REIT. And what is left is 14 billion naira of assets in inventory, which, as we talk about our strategy, our focus is on realizing, because these assets are generally low yielding, and reinvesting the capital in higher return opportunities that we see. The journey that led us to the right issue, I would say, started about 5 years ago, during the most recent phase of UPDC's expansion, which coincided with a downturn in the Nigerian real estate sector. And what happened was the company created assets that were illiquid because the markets froze and we struggled to shift those assets. And we also found that as the real estate sector went into recession, the values of those assets declined. And so we couldn't make a profit on the sale of those assets. And you would have seen from the account we released, we marked the value of those assets to market as is prudent, therefore booking the losses. The challenge was made worse by the fact that a lot of that expansion was funded with debt. And not only any kind of debt, mostly debt of a short-term nature. And so we found ourselves paying interest bills of over 4 billion naira a year and not having any capital to generate income to cover that interest expense. And so every year the company would sell assets and pay down interest, leaving the principal balance exactly intact, which, as everyone here is a finance professional will know, is not sustainable. And so as a management team, we had to figure out how to set the company onto a path of sustainability, which was ensuring that the company had enough capital to invest for growth and a capital structure that ensured that whatever interest expense existed could be met from recurring income. In assessing our options, we found we had two main ones. One was aggressive asset sales to bring in cash to pay down debt. Last year, we realized just about 4 billion naira of capital. And as I said earlier, we have a stock of about 14 billion naira, which the team is aggressively focused on liquidating to pay down debt. Now, the company currently owes about 20 billion naira of interest-bearing debt. And the idea is to use the proceeds from the 16 billion rights issue to pay down all of the short-term debt, and thereby reducing the debt burden by about 80% and reducing the interest expense proportionately. And as I've mentioned earlier, we will then focus on liquidating assets to bring the remaining debt balance of roughly 4 billion to as close to zero as possible, and then free cash for the company to continue to invest for growth. We see a number of benefits to the rights issue, and the biggest of which is ensuring that the company goes from a mode of realizing assets for paying interest to one where capital is freed up to invest in high return opportunities for shareholders in the business. At UPDC, the growth strategy is, as we see it, includes three broad steps. The first step is how do we realize value from our 14 billion of assets that yield close to zero? And Deborah and the team are aggressively focused on realizing cash from those assets. We saw good progress last year, and we've seen the momentum continue into this year. The next key element of our strategy is how do we generate a return from a hotel asset, which we carry at just under 8 billion naira. Like I've said, we've revamped the team at the hotel, and we refocused the strategy. We found that the hotel was trying to be everything to every comer, and we've now focused the hotel on meetings, incentives, conferences, and events, and airlines. And we're beginning to see some traction from the narrower focus in that business. Over the course of the year, we're going to tackle the energy cost, which is the biggest cost item that has hindered profitability. Since we brought on board the new team, we've seen for the very first time, not on a sustained basis, month in which the hotel actually turns a profit. And the task ahead of us is to ensure that we can do so consistently. Finally, we have redefined our development strategy. And I think when the Doyen spoke, he talked about how UPDC had historically focused on very high end. And we have found that the market at the very high end is challenged with excess supply, both in the commercial, that's office space, and residential. And a benefit we have at UPDC is having a very broad portfolio that allows us to learn from our mistakes. If we look through our portfolio, we can see what worked and what has not worked. And we found that where we can deliver units of property between 20 and 30 million naira, we generate more demand than we can meet for those assets. And we plan to focus on those, reinvesting the capital we harvest on those, what we call mid to low market developments. We've also found that there's a fair amount of demand for what is grade B office space. We think that the type of development that tries to command very high dollar rents does well in a boom economy, but struggles when the economy is a bit tougher. And so we're also going to refocus our development efforts on the mid-market residential, mid to lower market residential, and grade B commercial. From a portfolio strategy perspective, we plan to maintain a balanced portfolio. We're going to have a good portion of our development activity in residential, because this is a quick turn type of business where within a 12, 18 month period, we hope to make a 30% return on our capital. So it's going to account for roughly half of our development activity, and the rest is going to be a mix of commercial, retail, and what we call young professionals / student developments. We are thankful for this opportunity to engage with yourselves, and the offer is going to run until the 13th of March. My colleagues and I see opportunity in the real estate sector. We believe that real estate is a micro story, it's not a macro story. We acknowledge that there is an overriding perception of a recession in the real estate industry, but when we look at a micro level, we see opportunities for players who know what they're doing to make money. We believe we've built a team to exploit those opportunities, and we feel that the right issue is a considerable step towards addressing some of the legacy challenges the company faced and position the company to exploit the opportunities that we've seen.
Chief Financial Officer of UPDC PLC, Mrs. Folakemi Fadausi, speaks on the rights issues and access to the rates for shareholders in UPDC.
UPDC rights issue was opened on the 10th of February and is closing on the 13th of March 2020. It is to raise 16 billion naira to pay up our debts and to also give us a new start for the company, a new opportunity to grow the business, and take it forward into the future. So shareholders will have access to UPDC rates after the rights issue.
Mrs. Deborah Nicole Omerura, Deputy CEO, speaks on the projects being worked on at the company and other lines of businesses UPDC is exploring.
In terms of going forward, our real estate development portfolio, we've identified that the gap in the market really is in the middle income housing for young professionals. So housing that is priced between 20 to 30 million naira. We believe that those sorts of units, one, there's a higher demand in the market, and it also provides more stable, sustainable income for the company that we're trying to grow in the future.
So the next question, what other lines of business is UPDC exploring moving forward?
One of the benefits of changing and strengthening our management team is that we have a wealth of skill and experience in the team. And what we're looking to do is to outsource those services and that expertise to companies where real estate isn't really their core business. And so we provide asset management services. We'll go into a company, we'll look at their property portfolio, which forms a significant part of a business, even though it's not core. And we look at ways to optimize their portfolio, either through subletting additional space that's not used, renovating the building to create a better experience for their employees, or maybe building a new head office that's more in line with maybe the world-class type image they're trying to portray outside in the market.
The MD CEO, Mr. Ayesimoju, speaks further on the rights issue and other critical developments UPDC PLC is deploying to create value in the market for 2020.
We view real estate as a micro business, not a macro business. So we acknowledge that a lot of the sentiment around real estate is currently negative, but we continue to see opportunities in very specific parts of the sector for players who know what they're doing. We at UPDC have the benefit of a very broad portfolio, and so we can see what works and what does not work. And we see a lot of value in developing residential units at what we call the mid to lower mid market, which is units between 20 and 30 million naira, and also grade B office space for domestic corporates. We've done this in the past, we've made money, and we continue to do so going forward.
Amidst the challenging macroeconomic environment, the UACN property development is poised to deploy the 15.961 billion naira raised through the rights issue to reduce its debt level, strengthen and improve its capital structure, and improve free cash flow, which will translate into better performance and value for shareholders.